Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys are having a good day today trading. I am recording this intraday, midday, well, late afternoon. Market should be open for another hour and a half as I record this video. So looks like, because last several weeks the market has been like this, and we really didn't see a whole lot of action. Market's been just grinding higher every single day, so I thought it probably not gonna be it's not gonna matter a whole lot if I do this a little early today. So anyway, so again, recording this intraday, market should be open another hour, actually to be precise, hour and 45 minutes as I record this video. Market should be open for another hour and 45 minutes to go until the market close. So far, market is up about 0.6%. I believe Nasdaq is up more. You can see the Nasdaq is up 1.1%. Small caps participating a little bit here today, about 0.7, Dow 0.5, S&P 0.6 there. So looks like after we found support here in the micro term pivot there, and my short-term moving average has not been breached for quite some time now. You see that light blue squiggly line there. I think the last time it breached below, and it was very, very briefly, and we talked about that on the last night's video, I believe, that since the entire month of August, actually, this entire month of August, right, from here to here, this entire month of August, we only saw two times where price, on an hourly basis, price gone below my short-term moving average, and then next hour, next day, we just got gapped right back up. Same thing happened here, gotten below my short-term moving average for an hour or two, next hour or next day, we continue to move higher. So pretty much, this market has been unstoppable in the month of August. Now we're getting into September, first day of trading for the September of 2020, and it looks like market continues to move higher. And there isn't a lot you can do at this point. Again, because there's no way you're going to start chasing up here after market moves 60 and 70% since the March lows. There's no way you're going to start going all in at the top if you weren't already in it. There's a difference you being already long near March lows or April lows or May lows versus going long here. Why? Because should the price see a decline or correction, you have that much cushion because you have that kind of gain in your account. So you're able to absorb certain drawback, and then it will give you some option to potentially add more. The problem with adding up here or start going all in long at the top. I mean, when I say top, I don't mean this is a top where like this is going to crash. What I mean is after market has produced 60 to 70%. I'm talking about the indices. I mean, we see these stocks are making like Apple's up 150% just last 4 or 5 months since the March low. So that's the difference, right? If you aren't already in it, you cannot chase it up here unless you're extremely, extremely short term, right? Only a couple selective stocks are making this move, and it's been more like that throughout last 4 or 5 months. A lot of tech has been really moving this thing. However, just last couple weeks, we realized that there's selective stocks that has already been making a move, right? Stocks that are already getting attention from other people, right? Stocks that have been lagging is not getting any attention. Nobody likes to go out and buy. And right now, it's FOMO, fear of missing out, and panic buying. That's what's occurring because most people missed out. Don't you understand here? Let me go daily chart here real quick. Most people missed out this move. Most people were not able to go long down here. Not only that, probably most people liquidated their positions, their longs, maybe even their entire portfolio in fear they were going to get into a Great Depression or 2000 or 2008 like bear market, completely liquidating their portfolio down here. And then as they see this market making new all-time highs, it is now potentially they're getting back in or something like that. Some kind of fear, FOMO buying, fear of missing out, panic buying, some sort, because there was a panic sell down here and now there's a panic buying up here, hence the low volume, right? Extremely low. You can see the declining volume there. That's not always bearish. I want you to know that indices can grind up like this with low volume, right? But it tells you that we got declining volume on the S&P 500 here, and this market is just inching higher every single day, and that tells us that it's mostly retail traders that are propping this market up. We're not seeing institutions. Institutions are not selling. They're not liquidating. They're not exiting their positions. That's why we're not seeing heavy sell-off right now. We see a little bit of selling. It gets quickly bought up because, again, all these retail traders who missed out this entire move, who might have, liquidated their entire portfolio back in March or April, they're trying to gap back in. And maybe if people think, if they think that they're long term, like they say, you know what, I'm long term, I'm gonna hold this for long term because I think they feel that we averted, right? We're now no longer in a danger zone. And keep in mind, most public do not invest or trade with a sound strategy. They don't look at fundamentals, they don't look at technical, they just kind of go with their feelings. And especially nowadays, with so many people just kind of staying home, doing nothing, right? And even just a couple of my friends, they get their unemployment check, they get their the checks from the government, and they don't know what to do with that, and they just put that in the market. So it's kind of got that mindset, and also it's been and more people staying home, more people checking out the news, more people realize, and they're bored. Essentially, they're bored, and so they just kind of all of a sudden people who's never really, like even me, like from my friends and family members who never cared about the market ever. Right? I've been trading this market for 10 years, and some of the people I've never heard from never asked me about the market. All of a sudden, I'm like, oh, wow, I heard that Apple's getting a split and Tesla's getting split. What do you think about investing in those? So that's kind of the mindset. That's kind of the psychology right now. And these people don't have much, experience. They don't understand the road condition, right? And so then, but keep in mind, majority of retail traders are uninformed, and they're going to invest by their feelings and by their impulsiveness. And so they're like, you know what? Apple's cheap, so it's much cheaper than before, so I want to get in and get extra shares. Tesla's much, much cheaper today versus, a couple days ago. These are the mindset, and that's what kind of propping up this market. Sooner or later, you're gonna see institutions taking some profit, and it could see some kind of domino effect, potentially see some abrupt sell-off. That does not mean, I want you to understand, that does not mean this thing is going to go all the way back down to the March lows. That's not going to happen. We've never seen that happening ever in the history of stock market, where a market comes down 20-30% and then makes new all-time highs, and then in that same year, and I've said this many, many times throughout this entire move last couple months, this thing coming all the way back down, making new lows or coming back down, retesting lows, that has never happened. And this time is not different. I want you to know that. What I'm saying is we may see some kind of abrupt sell-off, some kind of panic selling of some sort. The fear is going to come back in. What I'm afraid the most, though, is not so much that we're going to get in a bear market, because I don't think so. I don't think we're going to get in a bear market. I don't think we're going to go back to March lows. I don't think this thing is going to crash down 50, 60, 70%. What I'm afraid the most is that when we do see a pullback, we're not going to come back and get a quick recovery. Maybe we come back and make new highs or something like that, but I feel like it's going to be mostly a lot of volatile sideways. And because what's going to happen is, psychologically speaking, if we see some decent pullback, we're talking, right, like let's say on the S&P we see, let's say it goes up about 356 or something like that, let's say 357, and then we start pulling back. right? It comes down to my midterm moving, that's 8%, which isn't bad at all, and that's pretty normal. 10% will be also, I would say, about, I'm thinking maybe 8 to 10%. Worst case scenario, maybe 12. The worst, maybe 15. But I have a feeling we might not even get to more than 10% just because of psychologically right now, everybody wants to be part of it. Why? Because it's panic sold here. Now it's panic buying. Any kind of steep decline, even myself, I'm how happy to see about 10% corrections to accumulate more. But I think because so many people are waiting, so many people are preparing right at this moment, and they're just, you know what I mean? That's all they're just this entire time, right? There might be a lot of people, right? From this entire move, they might be completely in cash. They don't want to chase this, and they're just waiting for that decent sized pullback. Remember how quickly, this was only 8% pullback, how quickly we took a little bit, but how quickly that got up, right? How many people are saying that this thing is gonna come back down or something like that, right? And we covered this back in all throughout June where this is a good level of support. But anyway, so I think psychologically speaking, at this point, we're probably not gonna see this market getting the pullback. We will see a pullback. I just think it's going to get bought up quickly. I think a lot of people are just dying to get into this market, and that way we're going to get in quickly. However, because we made such a move, and because so many people are probably expecting to see another big rally, you know how the market is. Market likes to do what most people don't, you know what I mean, what most people don't expect. So I think when we do see a steep pullback, I don't think market is going to just go and just keep making new all-time high. I think we may stay here for a couple months when we do a sale pullback, maybe even until the election. And that's kind of what I'm thinking here. So as far as when are we going to see a top, or not top, but when are we going to see a pullback? Nobody knows. We want to continue to give benefit of the doubt to the buyers, but at the same time to know that market is extended, odds are catching up against the buyers. But you know how there's a saying that market can stay irrational more than you can stay solvent, right? You think that there's no way it can't go any higher. Market could go. Market is completely capable of doing the unthinkable. Think about where the Tesla is today. It's doing the unthinkable. Fundamentally does not make sense, but it is performing the unthinkable. Market is capable of doing this. This is the reason why it is the most difficult endeavor to trying to call top, trying to benefit, trying to make a living shorting this market. I guarantee you, every single people who thought that there's going to be a Great Depression coming, or this is going to be 2008, or this is going to be 2000, bear market, all those people who's been trying to short last couple of months, they're pretty much wiped out. Pretty much wiped out. Only people who are making money in this market is those people who took a risk back in March lows, May lows, June or April lows, May lows, June lows, and riding this market up as this market continues to move higher, right? Because this market rewards the risk takers and punishes the chaser and also top callers. Top callers. So I want to continue to stick with the bullish thesis in the long term. I am bullish in the long term, right? But with the short term and the mid-term extended sentiment, technically, but psychologically, who knows how long this could continue. I'm thinking maybe 3.6 might be the max level, right? We're getting into that resistance area here. Right, I drew this for you guys over the weekend video, and we're kind of getting into that level, and because how far we came from the lows, and that's let's see, that's a 60% move, so I think we're gonna at least slow things down here, maybe see some pullback. but it's not gonna be easy short, just let you guys know, because it will quickly bot up. It will quickly bot up. We may even see some whipsawing action where it makes new high, pull right back in, and something like that, and could grind for weeks or maybe even months. But any kind of steep decline we may see in the market, I think, you know, those steep decline will be buyable only if you're long term. Because I think if we do see a steep decline, it's not gonna go straight. We're not gonna see a V shape. I think it's gonna maybe like make lower low, and it could be grindy. You know what I'm saying? Like, I'm not saying it's gonna come down to 280 or something like that. I can't tell at this point. I'll need more data, and I'll analyze it with you guys. And if we see any kind of steep decline, I think it will be buyable if you're long term, if you're willing to hold through. But trying to time it perfectly, perfect bottom, those are gonna be you know, futile endeavor, right? Because nobody knows. Nobody knows where the perfect bottom is, nobody knows where the perfect top is. But I have a feeling that we're not going to get a big decline. I have a feeling that some kind of decline is going to be bought out quickly. So either we see, you know, we see very, very fast, abrupt decline. All of a sudden, one day we wake up, we see some kind of like 2% down there or something like that. But I wouldn't be surprised that it's going to get bought up quickly. And then, like, you know what I mean, and it stays up all day, and then maybe come down later next day, and then like go back up again, and then keep going higher, and then make new all-time highs, and then come back down. Like, I wouldn't be surprised to see something like that, where it would be very, very difficult to try to make money on the short side just because it is extended. I just want to tell you guys what's on my mind quickly, and so I'll come back for you guys tomorrow, and we'll see how the market is playing out. We'll go from there. Enjoy your rest of this day, and good luck trading tomorrow.